Since 2022, the world equity market has been very much paced by the huge gains in the US equity market, which in fact has been driven by 7 stocks now called the Mag 7. I have to say, though, that the signals from the equity market have been highly influential on our own view of the economy. You know, if we were going to go into recession, the equity market should already be in a bear market, and it most definitely is not. It's more than AI, of course, that's fueling the market, but this has led gains in 2023. Those Magnificent 7 stocks, heavily exposed to technology and artificial intelligence and all its promise, up over 80% and another 10% so far this year. If you look deeper into the list, you look into the mid-cap market, you look outside of the United States, and you will see, though, that there have been gains, far less impressive than that, but, high single-digit, low double-digit gains in 2023 are above the average, and it's signaling better economic times ahead. I think the problem with the equity market here is that the proof points, or the things that will legitimize current valuations for the most expensive stocks, those Mag 7 leaders, are becoming awfully high. In our math, they're looking like requirement for something like 33% a year earnings growth out over the next decade. And they've produced 22% a year earnings growth as a group since 2018 or 2019. So this is not an unachievable issue, but it is a challenging issue that needs to be fulfilled. Now, the broader list, earnings are probably going to grow pretty close to nominal GDP. And in our mind, that's 5% a year. And the consensus right now is 10% a year. Now, it's also possible that we could get to that 10% a year and that we're being too conservative. We're watching that very closely. How would you get there? Well, obviously, stronger nominal GDP growth, a little bit more real growth, hopefully, and inflation moving back towards 2%. You could do it that way, and it wouldn't take an awful lot. Or you could do it through a slight improvement in margins. Margins have been coming down as the economy slowed with the weight of higher interest rates. If you added 1% in margins this year and 1% in margins next year, yes, you'll come up with the level of earnings that will justify the bull market continuing. But this is the challenge for the equity market. Aggressive forecasts for growth or margins or earnings growth are now absolutely required to sustain the bull market. We're looking for gains in mid to high single digits for the world's equity markets. We're concerned about that Mag 7. We recognize they have achievable but tough to achieve targets. But we're encouraged by the fact that outside of the largest parts of the US equity market, mostly those Mag 7 stocks, most valuations around the world actually remain quite attractive despite the gains that have been posted since 2022. So if we could navigate that Mag 7, the economy continues on a growth track, and especially if we can improve margins over the next 2 years, this bull market will remain intact. But those are the challenges.